You should hire your kids to save on your taxes. No, seriously, this is a legitimate thing if it's done correctly. Hiring your kids is a great way to teach them responsibility and put money in their pockets, and most importantly, give you a tax break. Throughout the year, you'll constantly be asked, if you're anything like me, to pay for movies, extracurricular activities, cell phones, spending money, you name it. The kids always have their hands out. What if you could pay for these things and write them off on your taxes? That would be awesome. But unfortunately, you can't, unless you structure it correctly. Why not hire your kids to do stuff in your business like manage your social media, take out the trash, organize your files, or actually work in the business? It's totally up to you. And then pay them a reasonable amount for their work, and then let them use that money for movies, activities, cell phones, spending money, just like a job. The key is that they must actually work for you. You don't want to go down the road of tax evasion and doing this incorrectly. You also don't want to encroach on basic living needs because I'm sure the IRS would have a field day with that. But if they pay for non essentials and treat it as an actual job, it's totally within reason if it's done properly. So now let's go over an example of how this would actually look. Here's John and Wendy's Schedule C. I have a separate video on how to fill out a Schedule C if you've never done it or if you'd like a refresher. Just click on the card in the video. So I didn't completely fill out the form, but they have a tax office and they make $75,000 a year. I didn't give them any expenses for presentation purposes, but we can look at what happens with their tax bill. So now if we go from their Schedule C, where I put the $75,000, and then I go to their 1040, we can see that we have John and Wendy. We see they have little Johnny, who actually qualifies for the tax credit. We won't go over that in this video, but I also have another video on how the tax credit, child tax credit, can impact your taxes. So in this example, we have $75,000 of income. We have an adjustment to income of $5,299. We won't get too deep in the weeds. Just know that you get a slight adjustment for the self-employment tax that you do pay. We did the standard deduction. We wanted to keep this simple. And then recent tax legislation gives you an additional credit for it's what's called a qualified business income deduction. We won't go into details there, but just know you kind of get a credit for being in business. So you adding them all up, their total is going to be $34,020 of deductions or adjustments, to income. That's going to give you taxable income of $35,681. So now we will move down to our federal tax, and we see that federal tax is going to be $3,883. We also see that our self-employment tax that we have to pay for being self-employed is $10,598. That would give us total tax of $14,481. Now I won't go any further down into the tax return because I don't want to muddy the waters like I talked about earlier with the child tax credit, withholding, potential underpayment fees, etc. In this example, I just wanted to show what it would do to your total tax that you would actually owe for the year. So in this example, you have $14,481. So now let's say we hired little Johnny to manage our social media, take out the trash, file paperwork, etc. And then we paid him $5,000 for the year. And let's see what that actually will do to our actual tax return. So we will go ahead and add wages of $5,000 to our tax return or to our Schedule C. We'll go ahead and refresh the form. Okay. And so now if we look at our Schedule C, we still have our $75,000 worth of income. However, now we have wages of $5,000. So that brings our total income down to $70,000. So now if we go to our 1040 and see what that looks like there, we still have John and Wendy. We still have little Johnny. Johnny still qualifies for the child tax credit. Again, we're not going to get into that. But now it's showing our total income is now $70,000, and that's because we paid Johnny. We also have adjustments to income for the self-employment tax that dropped as well because now we have less income, so we will have less self-employment tax. We continued with the same standard deduction, and then our qualified business income deduction is a little smaller as well because now we have less income. So overall, our taxable income is $31,963. So if we go down and we see what that actually does to our tax, it brings our federal tax down to $3,439, as well as our self-employment tax down to $9,891. So our new total tax figure with hiring little Johnny is going to be $13,330. So now, as you can see, hiring your child can actually add savings to the bottom line. So if we take a look at a side-by-side comparison, you can see that the business income after expenses with no employees was $75,000. Hiring your kid dropped that down to $70,000. Self-employment tax went from $10,598 down to $9,891, and federal tax also dropped $3,883 down to $3,439. As you can see, we saved $1,151, and now little Johnny can pay for his own extracurricular activities. In fact, little Johnny can actually invest that money in a Roth IRA now that he has earned income. He could use that money for college, etc. But if he's anything like my kids, he's probably going to go to the mall and just spend it as he sees fit. What do you guys think of this strategy? Obviously, if you want to go down this route, there's more that goes into it with regulations and making sure you do it properly, but it's definitely something that I would consider. Don't forget to hit subscribe and drop us a comment on your way out.